Welcome to Flippening, the first and original podcast for full-time, professional, and institutional crypto investors. I'm your host, Clay Collins. Each week we discuss the cryptocurrency economy, new investment strategies for maximizing returns, and stories from the front lines of financial disruption. Go to flippening.com to join our newsletter for cryptocurrency investors and find out just why this podcast is called Flippening.
Clay Collins is the CEO of Nomics. All opinions expressed by Clay and podcast guests are solely their own opinion and do not reflect the opinion of Nomics or any other company. This podcast is for informational and entertainment purposes only and should not be relied upon as the basis for investment decisions.
Hi, this is Mike, producer of the Flippening podcast. I'd like to welcome you to this episode, which is a bit of a departure. Today's guest is Flippening host and Nomics CEO Clay Collins. Clay recently spoke at Consensus Distributed, a virtual COVID-safe version of CoinDesk's annual blockchain conference. In his talk, hosted by CoinDesk senior research analyst Galen Moore, Clay covered several topics, including the importance of quote currency dominance and why most aggregators 2x their volume data. We bring you that presentation, complete with slides and a video replay, which you can find at flippening.com/consensus. That's flippening.com/consensus. And now before we get started, here's Clay with a word from our sponsor.
This episode is brought to you by the good folks at Nexo.io. Here's a word from them. Nexo is the only lender offering instant crypto credit lines which let you use digital assets as collateral to get cash in 45 fiat currencies and stablecoins. You might remember Nexo from episode 64, where we spoke with their co-founder, Anthony Trenchev. If you haven't heard that episode, I highly recommend checking it out as it's one of our most popular episodes to date. And Nexo has a big announcement related to credit lines. Their annual interest rates for credit lines are now starting at just 5.9%, which may very well be the lowest borrowing rate in the whole industry. Nexo is also a strategic partner of exchanges, OTC desks, and crypto funds through its portfolio of structured financial products. Institutional counterparties can earn up to 8% annually on their idle stablecoins, enter into asset swap agreements, or directly borrow crypto. Individuals can also park their cash and stablecoins at Nexo's interest-earning account to get an annual return of 8%. What's more, interest is paid out daily, and you can add or withdraw funds at any time. So if you're looking to borrow, lend, or swap digital assets, Nexo is your go-to partner. Definitely explore Nexo.io, or if you're an institution, reach out to them at institutions@nexo.io.
Okay, back to our regularly scheduled program. Here's Clay's presentation at Consensus Distributed. Enjoy.
I want to start off with talking about quote currency dominance, which is something that I think is not talked about very much. So let's talk about quote currency dominance sort of as an indicator. So what is quote currency dominance? What we're calling this QCD. So for a given trading pair, I guess we first have to define what a quote currency is. The quote currency is this second currency in a trading pair. So this is the base currency, this is the quote currency, and it's generally uses the price reference. The quote currency is
if I say that Bitcoin is trading at $9,000, that means that the US dollar is the quote currency in that case, correct?
Right. That would be a BTC to USD trading pair with USD being the quote currency. That's basically what quote currency is. So what's quote currency dominance? Quote currency dominance is the percentage of overall global volume where the quote currency is sort of what you're looking at. So if you took all the markets where BTC is the quote currency, added up those volumes and took that as a percentage of global trading volume, that would be its percentage of quote currency dominance. And this is a really interesting metric to look at. Here's why I think it's important. Here's my case for this. You know, money is sort of referred to as a store of value, a unit of account, and a means of exchange. And at least on crypto exchanges, I think that quote currency dominance is the best measure of means of exchange.
In other words, this is a better measure than how many times Bitcoin is used to buy a cup of coffee or something.
Yeah, I mean, this is very crypto exchange centric. Right.
And people are using it as the unit of account to value other currencies. And therefore that means it becomes the kind of the medium through which trade happens on exchange.
So like stable coins are an interesting example of this. I'd say if someone's trading Tether, if that's their quote currency, then probably the unit of count is the US dollar, but the means of exchange is Tether. So there's some interesting things to consider here. And we've looked a lot at quote currency dominance, and at our core, we're an infrastructure company. So we don't have a single full-time analyst on our team who looks at data. We're much more accustomed to providing this data to analysts. But we found that during periods of time, quote currency dominance or the dominance of a currency as a quote currency has some interesting correlations. For example, this is, May and June of last year, we found that Tether as a quote currency was negatively correlated with market cap. And that was statistically significant. This sort of suggests that when people are trading across Tether pairs, often they're looking to exit, non-stable coin positions. There's a lot of conclusions you could draw from this.
Basically, overall market cap is going down. Tether's use as quote currency is going up. Is that the trend?
Right. Yeah. During this period. Yep.
Yeah. And when was this again?
This was, May to June of last year. Conversely, with the United States dollar, USD's quote currency dominance is positively correlated with market cap during that time. So in general, what we see is people tend to trade US dollars to buy Bitcoin, but once they're in the system, if they want stability, they tend to go to like a stable coin versus exiting out fiat, maybe because those are more expensive trades. There's a lot to look into here yet, and we haven't fully examined everything. But I wanted to kind of take this at a high level and speak to, we're going to get more and more granular here over time. But if we look at fiat versus crypto quote currency dominance over time, what we find is that, at the very beginning, fiat was the dominant quote currency. So people were trading across, BTC to USD pairs, Ethereum to USD pairs, or, Korean won or British pound, etc. But then somewhere around 2017, we started seeing crypto assets being the dominant quote currencies on a volume basis. And
you start to think about the rise of like BitMEX and Binance around that time.
Yep.
And a little later than that. And certainly that sort of crypto to crypto activity really growing in volume reflected in their growth as well.
Exactly. And you can kind of follow this over time from like 2013 to basically now, a lot more kind of fiat quote currency dominance. And then really in the last couple of years, crypto quote currencies dominating for the most part. So we have this sort of in broad strokes, fiat versus crypto. Then if we decide to look at asset type versus crypto, what we see is really this is a story in the last couple of years about stablecoins versus cryptos. You've got
stablecoins versus, and when you say crypto there, you're not including
non-stable coins.
Floating crypto, yeah.
Right, yeah, exactly. Yeah. That's not
and interesting also to me to see the infinitesimal amount that exchange coins occupy in this chart.
Yeah, I really thought that was going to be a thing.
A lot of people did.
Yeah, like I think it was a smart move. It was a smart strategy to attempt on the part of Binance,
sure,
to list all these BNB pairs, because if you want to sort of, if you want your crypto asset to become sort of the unit of account or means of exchange for the space, that's one of the fastest ways to do it, right? You've got the most popular exchange by volume,
right? For if you use if you're trading with the Binance coin, there's some reduction of fees, right? I think.
Right. Yeah. And it really is kind of a graduation for a crypto asset to move from being a base currency to being a quote currency. I mean, there's very few crypto. It's all Bitcoin, Ethereum, stable coins, and fiat. I mean, that's really all you see. Every once in a while, someone will, there'll be a very specific exchange and maybe they'll list their exchange coin. But, that there's not a lot of critical math there. So if we break this down even more, or sort of we look at this on a percentage basis, again, we see, in July of 2019, stable coins were 50% of quote currency volume. And we see stable coins over time eating up more and more of that quote currency dominance.
It's just gobbled the fiat, really. I mean, the crypto is pretty much flat to my eye. Or there's not a huge change there.
Yeah, it's gobbling up. It's gobbling up fiat, and
it's interesting because you think of it as replacing Bitcoin in some ways, right? But it really is the growth of the crypto to crypto trade that and stablecoins have just captured that as it's grown.
I mean, if you drew a line here through non-stable coin crypto dominance, it would definitely be going down as well. So fiat would be going down, and non-stable coin crypto would be going down also. So then if we want to like dig into this a little bit further, kind of what we see is really the rise of Tether. And, you know, there's lots of people have a lot of issues with Tether. I'm not here to enter that debate, but I do think there are kind of issues with its backing, certainly, and transparency around that. And
I mean, whatever your feelings on that, you can't deny the dominance. When you put it on the chart next to Bitcoin, you hardly see any of the others besides Tether.
Yeah, I mean, we really seem to see, Tether and Bitcoin kind of growing here over time. And then everything else, USDC, Pax, Korean won, other fiat currencies, even DAI. I mean, they're really just blips on this radar. And then if we look at this on a percentage basis, again, that's what we see is, right. Even Bitcoin is going down and getting gobbled up by Tether. So I think one of the interesting things about crypto is that it's attempting to disrupt the traditional financial system, but, Lindy effects and first mover advantages in many cases seem to be sticking, right? People, once they've entered this new system, don't seem to want to switch a lot. Yeah. And Tether's a great example of that.
I think that's part of the story as well of some of the exchanges that have grown. The listing of many, many coins has been, I was talking with Sam Bankman-Fried at FTX about this a little while back, like why list all these coins? They don't matter. And the reason is, well, if you want to trade that particular asset, that's a good reason to switch.
Yeah, if that exchange is the only place where you can trade an asset that you're passionate about, then that's going to lead to
that's where you're going.
New account growth. I think on the whole, it's hard to miss just sort of the dominance of Tether as a quote currency. I think that it's kind of interesting that people, what the data seems to show is that people tend to enter through fiat, but once they've stayed there, if they want to kind of keep the stability of the USD, they're not withdrawing out to USD. That money, looks like it's staying within the ecosystem, even if there is a sort of a flight to stablecoins during unstable times. So I think the second thing to talk about is something that I think very few people are talking about, and that is how most aggregators are doubling reported crypto volumes. When we count volume, globally, we believe that the right way to do this is to take all the trading pairs or all the markets that exist. So a market is a trading pair on an exchange, and add those up. And all the volume that flows across each market, sort of all those markets added up, that's total volume. What we're seeing a lot of people do is kind of an interesting and maybe even accidental manipulation of the data, where what they do is they take all the volume for Bitcoin and then add that to all the volume for Ethereum and then add all the volume of Tether. The problem is that Tether's volume is being included in Bitcoin's volume, and Ethereum's volume is being involved in Bitcoin's volume. In all of the Tether markets that include Bitcoin or Ethereum, that volume is counting both towards
right. You're
Ethereum
double counting those BTC ETH pairs, for example. Yeah.
Right.
So wait a minute. I mean, I want to ask a sort of a fundamental question about this. Like, it's frustrating to me that we don't have even a really clear picture of what volume is. Even the transparent percentage that you guys provide, I'm sure significantly undercounts the real volume in the market because exchanges like Wobi and OK are excluded. But for the investor, to what extent does it actually matter? If you're going to be sophisticated about thinking about volume, you're probably going to develop your own ways of calculating it and thinking about it. To what extent does it matter what the volume of the whole market is, I guess, is the question.
Yeah, that's an interesting philosophical question. I think that one of the issues in the space is that exchanges aren't regulated. You could start a 0x decentralized exchange, in an hour if you wanted to. You wouldn't have liquidity, but you could start one. And so, when you start kind of thinking about dark pools, OTC desks, bulletin board services, decentralized exchanges, it's almost impossible to get a perfectly accurate number here. Then add, wash trading or incentivized trading. It's hard. But I think that, despite the fact that it's really hard to come up with a great number here, the methodologies should be correct.
That concludes Clay's presentation at Consensus Distributed. We hope you enjoyed it. Once again, full slide deck and video replay are available at flippening.com/consensus. Before you go, I want to invite you to subscribe to our fully customizable daily crypto newsletter. It's the first of its kind in the industry. You choose the delivery time and cryptocurrencies. We ship tailored pricing data and market news 7 days a week. It's a great way to cut through the noise and drill down to the crypto market info that matters most to you. To subscribe, go to news.nomics.com. Again, that's news.nomics.com. All right, that's all for this week. Stay tuned for next week's episode. Until then, take care.
That's it for this week. To sign up for our free crypto investing newsletter, listen to other episodes, or get the show notes from this episode, please visit flippening.com. I also invite you to check out the startup that funds this podcast, Nomics, spelled Nomics, at nomics.com. Finally, if you got value from the show, the biggest thing you can do to help us out is to leave a 5-star review with some comments and feedback on iTunes, Stitcher, or wherever you listen to podcasts. Thanks for listening, and see you next week.